The consulting industry in the third quarter of 2025 found itself at a crucial inflection point. After 2 years of excitement, clients are now demanding measurable outcomes from digital initiatives, including from AI implementation. Consulting firms are now forced to pivot away from large multi-year strategic assignments towards highly specialized outcome-based implementations. However, this caution only fueled explosive demand in niche areas directly tied to technology and regulatory compliance. We observed 7 trends. Trend 1. AI implementation and deployment. Artificial intelligence advisory moved decisively from abstract strategy development to tangible implementation and deployment. This shift has created the largest single revenue opportunity for consulting firms in quarter 3. The demand is not about potential, but about achieving measurable return on investment from piloted projects. While 85% of organizations increased their investment in AI over the past 12 months, only 6% reported achieving ROI in under a year. This AI ROI paradox has led clients to exert immense pressure on consultants to deliver concrete, quantifiable value, often linked to revenue growth of 10 to 20%, or operational cost reductions of up to 30%. For example, strong revenue growth was reported specifically in generative AI consulting and implementation offerings, even as traditional services struggled. This new AI market requires consultants skilled not just in strategy, but in generative AI consulting frameworks and responsible AI principles to manage governance, reflecting a shift towards full-stack technical delivery models that are now mandatory for major firms. The second trend that we observed was the hyperautomation and autonomous systems, or Agentic AI. Client focus on automation expanded beyond simple robotic process automation, or RPA, to hyperautomation and the strategic adoption of Agentic AI. Agentic AI, or self-learning systems that can autonomously execute complex business processes, was a top theme in boardroom discussions, with mentions rising 40% quarter over quarter. This increased focus directly translates into consulting engagements aimed at orchestrating AI, RPA, and machine learning at scale to automate entire end-to-end business workflows, particularly across finance, banking, and manufacturing. The massive infrastructure required to run these autonomous systems has caused mentions of data centers to surge, creating demand for consulting services to optimize and finance the energy and power requirements of the rapidly growing AI infrastructure. The third trend that we observed was the deep specialization versus generalist lag. The consulting market is now structurally rewarding deep specialization over generalist competence, a trend that is rapidly eroding the traditional pyramid model. The pyramid model is a hierarchical structure with a large team of junior consultants, middle managers, and a small group of senior partners who manage client relationships. Because the entry-level job is now being disrupted, the supply of specialist talent in AI who become junior consultants is now rare, as technology companies offer lucrative perks for such talent. The conventional consulting approach is facing obsolescence because clients have developed strong digitized in-house capabilities. Consequently, revenue from broad generalist assignments is under strain. This has contributed to reports of longer sales cycle and greater price sensitivity. The skills in highest demand are now technical and niche, including cloud architecture, data center valuation, and generative AI consulting frameworks. This competition has fueled the growth of specialized boutique consulting firms that deliver faster, more cost-effective services, directly competing with incumbents like McKinsey and Deloitte by prioritizing targeted specialist providers over one-stop shops. The fourth trend that we observed was the cost optimization and corporate restructuring surge. With persistent global economic caution, demand for cost optimization and corporate restructuring advisory services surged. Firms are now forced to focus on immediate bankable efficiency gains. Clients are intensely focused on leveraging operational improvements and margin expansion to fund their required digital transformation. This environment favors consultants who can deliver quick, demonstrable savings. This trend is amplified by two external pressures: labor costs and talent availability constraints. Geopolitical tensions and tariff policies has increased the demand for supply chain digitization and optimization to build resilience. This resilience is required to move away from concentrated global supply chains towards localized or regionalized sourcing. This structured management of external risk has become a core competency for consulting companies. The fifth trend that we observed was the ESG advisory shifts to regulatory compliance and assurance. The ESG advisory market is growing rapidly, but its focus has evolved dramatically, driven by regulatory mandate and the need to mitigate greenwashing risk. The global ESG advisory market is projected to grow at a compounded annual growth rate of 24.8% from 2025 to 2034. The consulting focus has fundamentally shifted. 64% of demand is policy-driven, with firms scrambling to prepare for mandatory reporting frameworks like the Corporate Sustainability Reporting Directive or the CSRD in Europe. This legislative pressure is evidenced by a 47% expansion in demand for ESG data assurance and audit services. This service requires consultants who can integrate ESG metrics with core financial systems and provide verified disclosures. Geographically, the market is diverging. North America dominated the revenue share in 2024 due to strong investor activism, while the European market is projected to witness substantial growth due to its stricter regulatory environment and advanced sustainability policies. The sixth trend that we observe was the M&A integration focus in North America and Asia Pacific. With global M&A activities surging in value, totaling $371 billion in Q3, the consulting revenue shifted heavily toward pre-deal due diligence and critically towards post-merger integration or PMI, focused on synergy realization. The need for consulting expertise is underscored by the fact that North American dealmakers achieved a dramatic improvement in share price performance post an acquisition, which is around 9.8 percentage points above the regional index. And Asia Pacific acquirers performed even stronger, outperforming by 17.8 percentage points compared to their regional index. This outperformance is conditional on successful integration. Consulting is required to manage the cultural, technological, and operational complexities that make integration planning the toughest test for buyers. The strong M&A momentum, particularly in the Asia-Pacific region, is fueling regional advisory demand as acquirers seek to consolidate market share and acquire next-generation technology assets. The seventh trend that we observe was the talent demand, that is for specialized technical skills. The consulting talent market is facing a structural transformation, with the hiring model shifting from fresh graduates towards highly specialized, experienced lateral hires. The most critical skills required directly mirror the top revenue drivers, with AI literacy and implementation and infrastructure finance being the two niches taking all the attention in consulting. The surge in AI deployment requires specialized talent in generative AI consulting frameworks, cloud architecture, and advanced analytics. M7 companies' massive capex commitments have created a corresponding demand for consultants with experience in data center valuation and the finance or strategy experience of energy infrastructure. For in-depth industry trends, curricular analysis, and salary trends of M7 Top 20 MBA, and exclusive admission advice for masters and MBA programs, subscribe to F1GMAT Premium at premium.f1gmat.com/subscribe.